it's your opportunity to redo your home finances. And then your second question was more to what was
Why
it,
is it
right?
important?
Why
Yeah.
does it matter? It doesn't matter if you don't owe anything to your home, but is that really the smart way to be living? Because maybe it is okay to have a mortgage and you got to understand the different strategies because there's many different ways to look into refinancing for your home because a 1%, 2% drop in interest rate will change your monthly payment significantly, hundreds of dollars potentially for some people. So, and then you
Mm.
have the other camp where you've owned your home now for like 10, 15, 30, 40 years. Either you paid it off or you have very little mortgage balance owed compared to what your home value is today. And with that, that also gives you a different angle or perspective. So refinancing doesn't mean it's just refinancing for short-term gains, but it could also mean refinancing strategically to manage or build wealth over time that makes the most sense for you.
Let's talk a little bit about refinancing. So we are entering a lower rate environment where the Fed cut the prime rate. I'm sorry, the Fed cut the overnight borrowing rate last month, and they did it again recently. And the projection right now is that they will do it again in December, which could affect a lot of different rates, such as the prime rate, which is one of the main things that we talk about for HELOCs or other equity loans. But it could also affect mortgage rates.
Yeah, there's no direct correlation with the Fed cutting rates to actually affecting the mortgage market, but it is more so like the bond market sales, I guess you could say, or the yields. That's what's really going to dictate mortgage market and how it performs. We've had two rate cuts back to back now, but I'm not seeing a major drop in interest rates on mortgages because guess what? The Fed's been telling us they're going to be projecting or cutting rates now, which means the bond market and the treasury market, they've been looking forward to this date earlier this year. So if you look at it in the big scope year to date, the rates have already come down. So
Yeah,
it's
they priced it in already.
exactly. So it's like if you're responding to the Fed cutting rates, moving forward the next 3, 6, 9, 12 months, is refinancing something I need to look at? And that's what we're covering more on today because you don't want to be late to the game on this one. And at least be thinking about what your options are at the last minute when rates may not be at the lowest or you may have missed it.
Yeah. So let's talk about preparation. What can people do to prepare for an eventual or a future refinance if they want to do this?
I would say first off, consult with your like household, right? See if what your goals are. Like, do you want a lower monthly payment? Are you planning on staying in this house for the long term? Like, and or it's you may be sitting on a lot of equity. So what am I going to do with it? Is if I take this equity out, is it going to give me the opportunity to get further ahead in life financially? So it's like there's a lot of questions, right? So you have to understand why you're refinancing, and it might not be clear, and that's why you're here. So when we go over the different types of strategies or programs, that I hope that sparks an idea or thought so that you can consult with us to see and examine your actual financial situation.
Now that we've covered like the macro, like bird's eye view, 10,000 feet from this, what is it called? 10,000 feet view. Let's go into like the nitty gritty stuff. So first off, we have just a traditional refinance. You could do either a fixed rate or a variable rate. There's pros and cons to both, right? So talk to your mortgage professional to see what makes sense for you and for your specific situation. So, for people who are unfamiliar with these terms, a refinance is basically just moving whatever your current rate is, and then basically you lower your rate.
So you don't have to think about, I'm just going to lower my rate and have to reset to a 30. A lot of people don't want to do that. I personally don't want to do that. I'm like 8 years into my mortgage now. If I refinance to a lower rate, I want to make sure I'm not extending it further. I want to know I got 20 years or less, 22 years or less with a better interest rate because the payment should be in line or if not better with my goals. So it's like you have to understand what your goals are and what your options should be so that when you do start navigating this future potential refinance, it not only checks off one box, which is I want a lower interest rate. It it should check off multiple, in my opinion. Yeah. So with the FHA Streamline, it's you have to already be in an FHA loan, and with that, there's no income verification and there's no appraisal because the main goal is for the FHA homeowner to be able to save on a monthly basis. So as long as there's net tangible benefit of a minimum rate reduction from their current rate or a dollar amount, this is an amazing option if you're especially if you're older, right? And you're heading into a down market, you're on fixed income, it's it's the easiest way to refinance. And it's like I've seen clients where they were in between jobs or the income wasn't as stable as when they first got the home. But because they had an FHA loan, they were able to benefit from having that refinance completed and saving monthly.
Let's move on to a VA IRRL, or what we like to call a VA IRRL. This is specifically for our veterans out there, whoever's been a service member watching our channel. If you have not heard yet about a VA interest rate reduction refinance loan, this is an amazing tool to help you get a little bit more access to your income through lowering your monthly payment. So if you've been in your house for several years and you've built up some equity and you're not looking to take out any cash, you just want to refinance and lower your payment, this is something that you should look at.
Absolutely. It's one of the most powerful refinance tools for VA homeowners because it's like there's no income, no appraisal required. So you're not at risk for a down market or declining home values. And if you've bought your home with either of these loans, especially in the last 2 to 3 years, there's a really good opportunity to refinance. And we're starting to see that where there's a lot of people in our industry, we call it in the money right now, for a very good refinance opportunity, at least a percentage point or more, especially if you bought it at the high sixes or 7%.
Wow, a whole percent. That's a lot of money monthly, especially if your house is, in the, higher
Hundreds of
yeah.
thousands of
Yeah.
dollar range. Yeah. Like it's definitely something you want to optimize. It's refinancing is about optimizing. There's a strategy to it. You don't want to do it too often, but when you do, you want to make sure it aligns with your plans, and especially it aligns with your goals for your home. Because if you're planning on staying in this home forever, you definitely need to benefit from those step downs as the market gives you that opportunity.
Yeah, and I feel like there something needs to be said about, trying to time the market, trying to time the exact bottom of the interest rates. Like no one knows. No one knows. It's
No,
just
no.
like stock market. Really, no one knows. Thanks for watching. Subscribe for more videos just like this. But before you go, help us grow the channel by giving the video a like and a comment, or share it with someone that you know. And if you want to watch the full video, you can use the link on the left. Or if you want to watch more clips like this, use the link on the right.